Now, according to the local treasurers, what they tell us is 95 to 97% of these certificates are going to pay you back all of your investment plus a high interest rate. If you don't get paid, you're going to get the property. Welcome back. This episode is about tax lien certificate investing and what you need to know. Now, this investment not only helps your local county, but it also helps the homeowner. Now, how does it help the homeowner? Well, the homeowner is going to lose their property, so we're going to delay that by selling a tax lien certificate. So in many cases, the county, they don't really want the property. So what they're going to do is they're going to conduct a tax lien certificate auction. So we're going to talk about buying tax lien certificates and what you need to know about them. So a tax lien certificate is really a lien against the property that occurs when the property owner has failed to pay the mandated government taxes. Now, when they don't pay their taxes, the government's going to take action. Now, what's the government? Well, that's basically the county treasurer who gets their orders from the legislature and the board of supervisors, and they're going to have to do something about this. So what they do is they file a lien against the property. All right, when they file that lien, if it's not paid by the property owner, in about half of the states, at least 1,500 of the counties, that lien will be sold. And when they sell that tax lien certificate, it's a public auction. So tax lien certificates are an encumbrance that is against the real estate. In other words, it attaches to the real estate. The real estate can't be sold, it can't be mortgaged. Nothing can happen to this real estate until such time as that tax lien certificate is paid. So the certificate is going to allow you to make money with tax lien certificates. All right, now what is that certificate? It's a legal claim against the property. So what you can do is you can raise your hand at an auction and buy these certificates. So the county's going to sell them. So tax lien certificates mean the property can't be sold. So what does that mean? Well, that means that you now have a safe, secure investment. Now, liens are auctioned at public auctions. Now, when is that taking place? Well, it always will be announced on the county website. It also will be announced in the local newspaper. So they have online auctions and offline. I don't know what they're going to do in your particular county, but you can look it up on the county website. All right, so what are you willing to pay? Well, you're willing to pay the full price because you have to pay the full taxes. However, what's going to be bid on is going to be the interest rate on the tax lien certificate. So nationwide, there's over 3,000 counties. They're all separate jurisdictions. Well, only about half of those, about 1,500 of the 3,000 counties, are going to sell tax lien certificates. So all the states that sell tax lien certificates, they're benevolent states. That means they're not confiscating the property. They're leaving the property owner on the property. All right, so what problems does that create for you? Well, I'll tell you a little bit about this. For the past 30 years, I've been involved in tax lien certificates and tax defaulted property. I'm also a guide, I'm also a coach, but I'm really an investor, and that's how I make my money doing investing. All right, so I'm fond of saying with tax lien certificates, you have a safe, secure investment. I think it's one of the safest investments in America. Why? Because you can invest your money with the government, you're going to get a check back from the government. You can do that in all 1,500 counties. All right, so the money is safe. Why is it safe? Because number one, you're investing in a secure certificate, and number two, you're going to invest your money with the county, you're going to get it back from the county. That means it's protected by the property tax code. Now, according to the local treasurers, what they tell us is 95 to 97% of these certificates are going to pay you back all of your investment plus a high interest rate. 95 to 97% of these certificates are going to pay you. If you don't get paid, you're going to get the property. So what kind of great deal is that? You either get paid or you get the property. Well, if you bought a property for just back taxes, how many of those would you like to own? Especially when I tell you that there's no mortgage and there's no deed of trust. The county X's out, they wipe out the mortgage. How good a deal is that? All right, so we're going to give you some examples of that throughout this training, but investors like to get their capital back. Now you're going to get your capital back plus a high rate of return. Could be 16%, 18%, 24%, depends upon the county where you invest the money. So the individual states authorize this to happen. The legislature makes the rules, they pass the rules down to the board of supervisors or the county commissioners, and then they have the treasurer do all the work. In other words, all the enforcement is going to be done by the treasurer and the board of supervisors with tax lien certificate. Now, these rates of return are phenomenal. 16, 18, 24, all the way up to 36% interest, depending upon the state that you're going to get involved. All right, now, each county can have their own rules because each county is a taxing district. All right, so that means they can determine. So you could be in County A, and the rate could be 16, and you could go right next door, and it could be 20%. So you have to know the rules. So you're going to have to study. You're going to have to understand the rule. If you don't understand the rule and you don't know how to research, guess what? You won't know how much money you're going to make. But you can always find out by doing just a little bit of research. So what is a tax lien certificate? It's nothing more than a claim by the county against that particular property, all right? Now, if you buy a tax lien certificate, that doesn't mean you're suddenly going to be able to start charging rent to those people or go visit the property or kick them out of the property. You don't get any possession of the property. The property owner stays on the property for the full time. They can't be talked to. They need to be left alone. All right, so you don't get any claim to the property. You only have a claim to the income when they finally do pay it. You now have a claim to get your money back. That's called a covenant or a promise to get your money back and that high rate of interest. So tax lien certificates are always sold. They're auctioned at public auction. You can find out about those on the county website, and you can find out in the local newspaper. All right, when the bidding starts, tax lien certificates are bid down. So it starts at the highest rate, and then it goes down. The lowest bidder wins the auction. Let me say that again. The lowest bidder wins the auction at a tax lien certificate auction. If we're talking about tax deeds, we'll do that in another video. We're talking about tax deeds, the highest bidder is going to win. So don't be confused. When you buy tax lien certificates, you're bidding down. Lowest bidder is going to end up with that property. Okay, so the winning bidder is going to be whoever makes the lowest bid. That's going to be the winning bidder. The bidder can stay outstanding. In other words, the property owner can come and redeem the property anytime, depending upon the state, between 2 and 3 years. So this certificate could stay outstanding for as long as 3 years. Keep in mind, you have no right to charge the people rent. You have no right of possession of this property. Your only right is to collect money on this somewhere after 2 or 3 years. However, the property owner could come any day, even the next day, and repay that certificate. If the property owner fails to pay the property taxes, that means they failed to pay the property taxes and they haven't paid the certificate. That's one and the same. If they haven't paid and the redemption period has expired, that property owner is forfeiting the property to you. They're going to forfeit the property to the tax lien certificate owner. Now the owner is going to go about a foreclosure. You'll need an attorney to do that. Probably costs $500 or $700. You go ahead and do a foreclosure, and then you're going to take ownership of that property. All right, what's the best way to do all this? Well, you need to learn a little bit about this. I always tell people, look, why don't you get yourself a coach or a mentor, someone to help you and guide you along. Why? Because you won't make mistakes, especially the first time through. I always say education is important. Why? Because you just don't know what you don't know. Now, if you ask successful people, that's the way to learn things, from mentors and successful people. When I started asking other people questions, my life changed a lot. Why? Because those people had already made the mistake. They kept me from making a mistake. So you need to ask a lot of questions. Now, if you're going to ask your relatives questions, that's probably not going to help you a lot, because what do they know about taxing? Most people don't know. So you're going to have to find professionals to help you out on this. Now, I'm not talking about just anybody. I'm suggesting you think about a coach. Now, here's a young couple. They purchased a tax lien certificate. This is a very short, quick example for you. They spent $11,000 and they didn't get paid. In other words, the redemption period went along and they paid the taxes, but the property owner never ended up redeeming the property, and the young couple kept paying the taxes. The judge awarded them the property after the redemption period. They invested $11,000, and then that was their property, so they rented it for a short period of time. Then they resold it, and as you can see on the screen, they made $169,000 after paying a brokerage commission. How many deals like that would you want to do? Well, you'd want to do as many as you could. So Drew and Risha purchased that certificate in Phoenix. They paid all the back taxes, and they ultimately ended up owning the property. This is a rare occurrence, but there are people that don't pay for these properties, and when they don't, you end up with the property. Now, my name is Ted Thomas. I've been doing this for more than 30 years. I have lots more information for you, but what I want you to see is right below me, we're going to give you a demonstration of an interactive map and auction calendar. So you can see the white circles on this map. All right, now this map is going to show you a lot of things. For example, counties with very low populations, in other words, small population, they'll have dozens of tax lien certificates or dozens of tax defaulted properties to sell. All right, but counties with large populations, they'll have hundreds, even thousands of certificates to sell, and they'll have thousands of properties that they can sell. So you want to learn more about it, it's right here below me.